Good morning, Chris here, and we're going to talk about some proportional moves in the major indices. So right now, after yesterday, we pretty much have a bullish, or at least bullish sentiment market, where you see the Nasdaq has been going up. Nasdaq wants to go up again. Thank you to once again the invincible Apple, and the S&P and the Dow, they look like they're going to be pretty much flat for the morning. But what I want to talk about is I already have my wave counts here on the Dow Jones, and the idea is if I zoom this guy out, go to a 3-month chart, I called this the very bottom of our first wave down, and then we had a double correction where we had A, B, C, and then a connecting line that we'll just call X, and then once again A, B, and we're back into a C wave right now. So the way that we can measure this out is that in general, an A wave is going to have, an A wave is going to be an exact proportion to the C wave. So you see I have A2 should be an exact proportion to the C wave. And if it isn't, it should be exactly 161.8% of the shorter wave. So if, for instance, like I'll say the first A wave and the C wave, they're not exact proportions. So that means that the A wave should be 161.8% the distance covered of the C wave, and should be the same relationship with the second A and C wave. So this is how we have been getting our maximum target for the past like week or so. So all we take this entire movement right here, and actually I'll show you first. Put it to the bottom of the C wave, and we notice it pretty much plows right through it. So the market barely even recognizes it. So next thing we do is we put on the 161.8, and now we see that we actually have a price target sitting right here around 13,301.23 cents. Sorry, I had to put in the cents there. So that would be, if we're still going to be bearish, that would be our expected target, and 13,331, which is the past, that was the May high, that would be our maximum target. So these are both target ranges. If it breaks through there, hey, it looks like we can't be bearish anymore. It looks like the next highest probable scenario is going to put the Dow up another roughly 1,000 points. So let's do the same thing with the S&P 500. Remember this wave up and then the current wave up. Just remember those. All right. So if I go to the S&P 500, so we have our A, B, C, X, and then this is A. So if I draw this one to the top and put my 161.8 and then put that from the bottom, it gives us a target sitting really close to where we are right now. So 1417. All right, so I do that and take a look on the Nasdaq. Now this one's going to be a bit different, so I got to quickly do the wave counts on this one. So if the low was on June 4th, I would have an A, then B, then C, and then X, A, B, C. Actually, this one actually is forming a triangle pattern. So this one actually does give us a different corrective pattern. So instead of giving us that 3 wave, it gives us the X, A, B, C, D, and then we are in E. So I really can't do a measuring stick rule from that, but I can say that we should be roughly, and this is very rough measurement, we should be roughly the distance of the entire triangle, so around 3125, but I'm not going to count on that one too much. I think it's probably going to be the same scenario with the Russell. Yeah, we really can't see what's going on this one as well. So just stick with the Dow and the S&P. So Dow 13,300, and the S&P is once again just around where it is now. So 1417 with a maximum target of 1421. So we'll see how the market reacts to all this, and the 10 o'clock leading indicators and consumer confidence report, we'll see if that actually moves the market at all. All right, thanks for watching. Happy trading.